stock market been drinking green beer this week? It's been up, it's been down, it's been acting bipolar sometimes. On days when it goes down, the riskier assets often perform better, and then sometimes it closes higher. It's like it doesn't know which way it wants to go. This crazy market behavior shows up in our risk metrics, so let's take a look at what's going on. So if we look back over the past week, you can see we've had a very healthy looking rally here. Nothing to worry about, right? ARK, the riskiest investments, finished the highest. NASDAQ came in second highest. S&P, Dow, the small caps have been faltering a little bit, but this in general looks pretty healthy. And what about over the last month? Well, this looks a little more tentative. You can see kind of been going sideways here. We had a pullback back here before March 13th, and then we've had somewhat of an attempt at a rally here with ARK going up the most and the NASDAQ kind of going up second most if you look at the slopes. Yeah, I wish we had a better purple here for this, but here's ARK, and then let's put the NASDAQ up there. So you can, it's a little hard to see, but you can see that ARK has a higher slope here than the NASDAQ. This is what you want to see. This looks great. And if you look back over the last 6 months, you can see that recently we've had an unhealthy declining market here until this bottom. Now, the only thing I don't like here is the way that small caps have continued to fall here, but ARK has gone up very nicely and the NASDAQ 100 has gone up very nicely. This is starting to look like a healthy rally. Let's take a look at the bottom dynamics. I don't think there's a lot to see here right now. We had a very brief bottom forming indication back here. Markets started to rally and then fell off. We had potentially a bottom forming indication here, but the confidence level was just a little bit too low. Close though, very close. And now, because today was such a big down day, you can see the bottom forming indication is moving up and the confidence level is moving higher. So I don't know from this if this market's going to go down or up next week. No way to tell. But what gives me a little bit of concern still is when we look at these risk levels. So if we look at the red line, this is risk in the market. You can see it's still at a very high level here, just south of 80, which is not good. And you can see risk acceleration, the yellow line, which shot up here and then peaked out over 90, is now falling. I like the fact that these are falling, but I'd really like to see them drop more. And what about equity versus safety? This tells a very good picture because it tends to act fairly quickly. So you can see back here on February 24th, we had a very unhealthy stock market with the NASDAQ kind of near the bottom of the pile here. And we had cash, short-term treasuries, and intermediate treasuries ranked 1, 2, and 3. And we also had an unhealthy treasury market with the long duration treasuries down here at the bottom. And then if we move forward, we had a little bit of a rally attempt here, but cash, gold, and short-term treasuries still ranked 1, 2, and 3. And then last week, a week ago on Friday, we had a very healthy treasury market with the longest duration treasuries ranked 1 and 2, gold ranked 3, cash ranked 4. So again, this is a fairly unhealthy stock market, but I was liking the fact that the NASDAQ was at the top of the equity pile here. And then where are we today, this Friday? Well, you can see that the NASDAQ has just jumped up here. We still have a healthy treasury market. Gold is in first place. I think this is partially because of the banking fears and the contagion that's going on there. People are putting their money in gold. And then we have cash and short-term treasuries down here. I like this. I'd like to see these other equities start to move up as well, though. And how does this show up in the buying and selling pressure? If we look at the Dow Jones Industrial Average, you can see that the selling pressure, this orange line, really shot up here. I mean, 10 is a fairly high number. Now, it has since collapsed, but we'd like to see the buying pressure move above the selling pressure. So this doesn't look quite healthy yet. It's moving in the right direction, but we're not quite there. What about the S&P 500? Similar picture, not as bad. Selling pressure really shot up here and has been kind of collapsing lately. But if we look at the NASDAQ 100, you can see the price movement has been going higher except for today. And you can see the selling pressure has fallen and the buying pressure is moving higher here. This is starting to look good. Now, the Russell 2000 has not looked good lately. You can see the prices collapsing. You can see the selling pressure really shot up here, even though it has been kind of collapsing. And what about ARK Innovation? These are the riskiest stocks in this basket. If you look at ARK Innovation, you can see the price is moving up nicely here, although over the longer term, the price has been in a decline. But I like what I see here with the buying pressure moving above the selling pressure. This is starting to look good. Here's another mixed up part of the story. So if we look at sector rankings, what you want to see in a healthy market is you want to see cash down here where it's kind of here near the bottom of the pile. So I like this. I like the fact that consumer discretionary is ranked better than consumer staples. That looks good, although I'd like to see it move over here. I like the fact that technology and Bitcoin risk assets are ranked number 1 and 2. Gold is number 3. We've got 2 technology sectors here, 4 and 5. So this looks good, but I would like to see treasuries down here a little bit lower. I'd like to see cash move over here further. We're not quite there. It's a little weird. That's why I said this market kind of doesn't know where it wants to go. Now, if we look at the sector rank acceleration, these move much more quickly. And you can see what's happening here. We've got Bitcoin and technology ranked 1 and 2. This looks great. But we have treasuries and gold way up here near the top. I do like the fact that consumer discretionary is here, well above consumer staples. And I like the fact that cash is sort of moving down, but really you want cash way down here somewhere near the bottom of this pile. So this is giving a mixed picture right now. I like the fact that ARK is here. This looks good. But again, it's a very mixed picture. It says, oh yeah, things are great. Oh yeah, things are not so great. So all at the same time, it's very confusing. And if we look at treasuries over the past week, you can see that they really had a tough time here. But since they bottomed out back here, they are moving up in a healthy fashion. And if you remember from last week, I looked at this inverted yield curve and was really blown away. I mean, we were almost 1% inverted, 96.48 basis points. That is ridiculously inverted. It's crazy. But where are we this week? Well, we've had a real move here in the yield curve, and it's moving toward being less inverted by a lot. Now we're only inverted by 43 basis points. So we have a little bit less than 0.5% move to go before the yield curve becomes uninverted. This is looking very, very good. I'd like to see it keep moving in this direction. And what has to happen for that to happen? Well, the Fed has to lower rates, or rates on the long end have to go up, or both of those things. And how does the buying and selling pressure look for the treasuries? Well, for intermediate treasuries, you can see the price has been moving up very, very nicely here. And the buying pressure, this gray line, is moved up very nicely here. So we've got a nice rally going on. This looks very healthy. So if we look at 7 to 10-year treasuries, these are what I call intermediate to long treasuries. We've had a very nice upward move in the price here. The buying pressure really shot up here and then just collapsed. So I'm not quite sure how this is going to turn out, but let's see how 20-year treasuries are looking. And if we look at 20-year treasuries, again, very nice upward move in price. And the buying pressure, even though it peaked out here and fell back, is still well above the selling pressure. So this looks very healthy. And what about gold? Well, with the bank contagion and the geopolitical risks and all the other stuff going on in the world, gold is just taking off here. And you can see it in the buying pressure, which has been shooting up for the last month. So the price is moving up, buying pressure is moving up. This looks like it's very good for gold, but I find gold very hard to make money on. And what about Bitcoin? Well, I think this is a reflection of the bank contagion as well. Look at the price. It's been shooting up, and the buying pressure has been also moving higher. Bitcoin and cryptocurrencies and blockchain all continue to work flawlessly, even though the banks are faltering. Look, are we out of the woods yet? Maybe, maybe not. There are clearly still risks ahead in the form of potential banking failures, the continuing war in Ukraine, China tensions, and all the self-induced potential recession that might not happen. Over a week ago, we removed the hedge from our clients' portfolios, and we're currently holding 10 to 15 to 20% cash in those portfolios that we plan to deploy either long or short once this market figures out which one of its personalities are going to win. I'm Calvin Rose, and thank you for watching Invest Smarter this week. That's all for now.